Generally accepted accounting principles. Before starting week number 5 and 6 and a new chapter, the accounting cycle, capturing economic events. Before starting this chapter, you are supposed and you are required to study well and to understand well the generally accepted accounting principles. The generally accepted accounting principles are really those principles which are developed by different accounting authorities, different accounting regulatory bodies like the FAS, Financial Accountancy Standard Board, and other American based associations, right? These are the principles which are to be strictly followed for solving and dealing with business transactions and accounting transactions. Your business transaction is to be complete, your business transaction is to be accurately recorded according to this principle. If you don't know about this principle and if you don't have any idea, right? So generally accepted accounting principles are designed for treating these transactions accurately in the books of accounts. Today we are going to discuss or to take a brief overview of these generally accepted accounting principles and to state how they will be treated and how the business transactions are to be recorded according to these principles. Financial accounting always its focus is on reporting to the external parties as well as to the internal parties, but these financial information are very properly carried out, are very properly designed, all the transactions are very properly passed according to these principles, right? These transactions normally measures and records the impact on the economic entity of the business, and it provides financial statements based on generally accepted accounting principles. That's why every statement and every business transaction which is produced by your accounting system, which is produced by your accounting information system, is to be very accurately well prepared according to these principles. Generally accepted accounting principles primary objective is to prepare the financial statements and to pass all the business transactions very accurately and to produce a certain result. What is the primary objective of financial accounting and reporting? To provide information which are to be useful for making investments and lending decisions. If every accountant used his or her own rules for recording transactions, the financial statements would definitely be useless in making comparisons and in making decisions and in streamlining the economic activities of the business. Your personal opinions and your personal rules are not applicable to the accounting transactions. Accounting, which is the ocean of financial transactions and financial activities, will be treated according to certain rules, will be treated according to certain principles, will be treated according to certain conventions, concepts, the basic concept, the basic rules, the basic framework for dealing with business and financial transactions. Therefore, all the accountants, all the managers, all the accounting personnel, they have agreed upon to apply a certain set of common measurable principles and rules regulation in a common language to process the information in such a way, in such a recommended way, according to such a recommended framework for designing very sophisticated financial statements. Otherwise, if you are not properly applying these rules, you are not properly applying these certain generally accepted accounting principles and basic concepts designed by different accounting regularized bodies, then it's quite impossible to compare your financial statements, because one organization might have a different set of financial statements and you might have a different set of financial statements. And if there were no harmony between the financial statements, we cannot extract the accurate results. That's why it is necessary to have a proper applicability, to have the proper rules regulation, and accordingly to form a very recommended set of financial statements. What are the accounting principles and concepts? Accountants follow professional guidelines, right? They sometimes call it the professional guidelines as well. The rules that govern accounting are called GAAP, the generally accepted accounting principles. And again, these GAPs everywhere applicable, and different chapters and different sections of the accounting. It means that your accounting is wholly solely based on, it's wholly solely to be worked out according to these principles. Generally accepted accounting principles, a term that applies to the broad concepts or guidelines and detailed practices in accounting, including all the conventions, rules, and procedures that make up accepted accounting practice at a given time. Regulation of the accounting profession, Securities and Exchange Commission, Financial Accountancy Standard Board (FASB), American Institute of Certified Public Accountants. These are the regulatory bodies who are working on the back of accounting, who are working on to strengthen the accounting framework. Every country, whether it is Pakistan, whether it is India, whether it is UK, they have their own Securities and Exchange Commission, right? And the basic role of this Securities and Exchange Commission is to organize and streamline the business activities, the business setups, the establishment of your business, and the financial reports and the financial information which are produced by your organization according to the generally accepted accounting principles, and all the auditors, which are the external bodies that will come and they will check out your accounting procedures. Financial Accountancy Standard Board (FASB) is an American-based accountancy regulatory organization who are developing from time to time. They are overviewing these financial based regulatory framework, and they are carrying out certain activities. They are developing, they are restructuring the framework for accounting treatment. American Institute of Certified Public Accountants (AICPA), which is CA, like the CA based firm, right? They are also working in the establishment and in the strengthening of the financial accounting rules. Standard setting bodies means in the United States, the GAAP is set primarily by the private sector with government oversight, and in many other countries such as France, the government actually sets accounting standards, right? So the government or the private bodies in coordination with the government, right, are in coordination with the government bodies. They are establishing these rules, regulations for a well out framework, for a well structured treatment of business activities. Standard setting bodies, Securities and Exchange Commission, the agency designated by the US Congress to hold the ultimate responsibility for authorizing GAAP for companies whose stock is held by the general investing public. The SEC has informally delegated the powers to make accounting rules to the FASB, right? So it means that the FASB and the Securities and Exchange Commission, they work in coordination, right? And they are they are establishing such rules, such regulations, and such principles, conventions, which are in the best interest of the accounting, recording the accounting treatment. Financial Accounting Standard Board, responsible for establishing GAAP in the United States. A private sector body consisting of 7 full-time members and a large support staff, right? And their basic activity is to work out for accounting, is to work out for principles and conventions. International Accounting Standard Board, IASB, that is another regulatory body, that is another standard setting body, whose work is also to develop and to framework the accounting principles, the accounting rules, regulations, right? This is an organization representing over 143 accountancy boards from 104 countries, that is developing a common set of accounting standards to be used throughout the world. So globally, these standard setting bodies, their framework, their rules, regulations, right, they are to be globally accepted, and no country can violate these rules, because the external body auditor will come and they will check their financial statements and their financial reports according to these rules. If they have violated these rules, they will put objection and they will put a negative report about their financial statements. So every organization, every financial business, every multinational company, right, whether it is a small business or whether it is a partnership or whether it is any other medium-sized business, they have to carry it out, right? They have to carry out their business activities according to the rules, regulations set by these standard setting bodies. So globally, there is no space for violating these rules. Globally, these rules will be adopted and applicable to accounting procedures. The basic theme behind these rules, generally accepted accounting principles, to harmonize the accounting standards globally and to eliminate or to eradicate the differences in accounting principles, right? Investors are committing more of their money worldwide. Many multinational companies voluntarily issue their financial statements in conformity with the IASB standards, and they have to follow the rules, right? Every multinational company or every business or every partnership firm are very much exposed to these rules, regulations, and they voluntarily issue their financial statements in conformity to these rules, regulations, to find out certain differences, right? Auditors might come and they might check their statements, they might come and they might have a very comprehensive report after checking these financial statements. Important concepts. There are certain important concepts which are developed by these organizations, which are developed by these regulatory bodies. Number one, sometimes we call it assumption, sometimes we call it principle, sometimes they are called dogmas, sometimes they are called principles, sometimes they are called conventions, but there is very slight difference amongst all these. However, important concepts, entity assumption or entity concept, going concern, asset valuation, right? Then asset valuation consists of two basic concepts: historical cost concept and market value, liability recognition. What is the entity concept? According to GAAP, the entity concept is very important. According to accounting principles, according to the accounting concept, the concept about the entity of your organization is very important. According to this principle, your entity must stand apart from your organizations and individuals as a separate economic entity. Your business must be considered as a separate economic unit. You cannot mix it up with your personal affairs, you cannot mix it up with your other affairs. The entity concept helps relate events to a clearly defined area of accountability. Your business which is owned by you, your business entity, that must be very separately kept out, and that must be very separately dealt out of your personal affairs. Your personal affairs, your personal dealings, your other affairs, they must not be mixed up with your business entity. Your business must have a separate status, and according to it, your business status, your business entity, according to that, you are accountable for it. An accounting entity, to be very simple, an accounting entity is an organization that stands apart as a separate economic unit, right? It means that your business must play a vital role being a separate economic unit. Assume that John decides to open up a gas station and coffee shop. The gas station made rupees 2,50,000 rupees in profits, while the coffee shop lost rupees 50,000. How much money did John make? At a first glance, we would assume that John made rupees 2 lakh. However, by applying the entity concept, we realize that the gas station made rupees 2,50,000 while the coffee shop lost 50,000. So this 50,000 will be subtracted, right? If you accurately value these two different entities, right, the lost amount will be subtracted. Now the second principle, which is the going concern concept. The going concern, according to this concept, your business must continuously work on. There must not be any activities breakdown, right? The entity will continue to operate in the future, and there must not be a certain limit. There must not be any breakdown in your activities. Your activities of business, they must continuously carry on, and there must not be any breakthrough, there must not be any discontinuation. According to the going concern convention, or according to the going concern principle, or according to the going concern concept, the assumption that in all ordinary situations an entity persists indefinitely. For an indefinite time period, your business must go on and it must carry its financial activities, its economic activities. According to this notion, according to this idea, according to this point, which is applicable to your business, right, and which is applicable to your company, your existing resources will be used to fulfill the business needs of the company rather than to be sold. Your business assets, your business resources must stay for a longer period of time in your company. If your continuity is in doubt, right, if there is certain doubts about your business continuity, your business economic activities are continuous, there is no continuity, right, a liquidation approach to the balance sheet is taken, and the assets and liabilities are valued at if the entity were to be liquidated in the near future. What do we mean by liquidation? Liquidation is another process in business. In terms of accounting, in terms of business, the word liquidation is used at the time if your business is going to be liquidated, if your business is going to be finished, right? And if your activities are no more to be continued in the future, then liquidation occurs and your business will go closed. Record fixed assets at original cost and depreciate over a period of time, right? Your assets must be recorded at its original cost, right? And you must depreciate over a period of time all your assets. Depreciation is another concept which we will discuss in later chapters and in later classes, right? Take prepaid expenses as assets. All your prepaid expenses, for example, you paid somebody or any outsider, you paid him a certain sum of money as your prepayment. Until and unless prepaid amounts are always paid in advance. For example, if a businessman who paid rent for a few months, right, for the whole year in advance you paid the rent, right, that rent will be considered as a current asset until and unless it is fully utilized. Business is concerned with net income or earning capacity as compared to the market values. Exactly, the basic function of any business activity is to earn income or the profitability. Profitability is the sole objective, and for this purpose we are doing business. Materiality convention or the materiality concept, it is another very important concept. According to the generally accepted accounting principles and basic concepts, this materiality concept, a financial statement item, is material if its omission or misstatement would tend to mislead the reader of the financial statements under consideration. A material, anything is to be considered as material which brings a drastic change, right? Its omission or its misstatement brings a drastic change. Anything will be material, anything will be misleading the organization if materiality often depends on the size of the organization.